Hi everyone, so welcome to the stream today. Really excited for having you on the stream as we continue with our discussion for the November 2025 examination. On the stream today is a special Q&A session, so going to be answering any questions that you have, and also we'll be providing you with some strategies and tips that you must understand as we go into the exam hall. So any questions you have, something you want me to share my thought on, you can drop it in the comment section or the chat for me, and I'm going to provide you with some answers as we get ourselves excited into the exam. Now remember that at this point, we are left with some few days, about 14 days or less to go for the November 2025 examination. What it means is that if you have something to do by now, you might have started doing that already and also putting yourself in the position so you can pass the examination. But there are some key questions that we need to answer. For instance, what are the key areas that we have to focus on? What is going to be the structure of the examination? What are the key topics that we have to optimize ourselves on to be able to pass the examination? What does it take to actually excel in the examination? What should be or should we be expecting as we go into the exam hall? And these are a couple of questions that I'm going to be walking you through on the stream today. And as I said, if there are any questions you have, something you want me to share my thought on, don't hesitate. Put it in the comment section or the chat for me, and I'm going to be answering and providing you with some solutions as you prepare for the examination. So let me bring up my screen quickly, and then we get excited into the discussion. So first things first, going into the exam hall, there are a few things that we need to understand to put ourselves in the position to pass the examination. As always, the first thing that we need to be on the lookout for will be the structure of the exam. Because there are many people who are oblivious of the structure of the examination, and they walk into the exam hall and are surprised, or there are a few things that they have focused on that they are looking at, but then they go to the exam hall and something else comes. And so what are the structure of the exam? What is the structure of the exam in respect of each of the subjects? And what are the areas that we have to optimize on to increase our chances of ultimately passing the examination? And that is very important as we get ourselves into the discussion. Again, if there are any questions, this is a live Q&A session, so any questions, maybe there's a topic, a key issue that you want to pick my brain on, put it in the comment section or the chat for me. I'm going to be bringing your screen up or your comments up and providing you with some answers as we go on with the discussion today. So first things first, let's start from financial reporting. If you are writing financial reporting, what does it take? What will it take to go into the exam hall and pass the financial reporting examination? A number of things. So the first thing is for us to look at the examination. So as always, we're going to be having 5 questions. Question 1 is going to be on consolidated financial statement. So consolidated financial statement. Question number 2 is going to be on the accounting standards, that is the IFRSs. That's question number 2. Question number 3 is going to be on the single entity financial statement. Okay, single entity financial statement. Question number 4 is going to be evaluation of financial statement, or what you refer to as ratio analysis. Question number 5 is going to be the theories, or if you want, the rating areas. Now, before I get goosebumps into the breakdown of any, I'm seeing a question coming up quickly, and I want to tie that into the discussion. Elichem Law said, I am sitting for the first time. Can I answer the question? Can I answer questions in any order? Which subject are you writing, Elichem? Which subject are you writing? Yes, you can answer the questions in any order. You're not under obligation to answer Question 1, question 2, question 3, question 4. You can answer the questions in any order, but there are just a few things you must understand. Number 1 is that you cannot answer 2 different questions on the same page. So for instance, you cannot answer question 1B and question 5C on the same page. You cannot do that. However, as far as it is question 5 or question 2 or question 3, you are not under obligation to answer the questions in any order. So the strategy is you're going to start with what you can do best first so you can optimize yourself to ultimately pass the examination. So for instance, let's say financial reporting, as it is a paper you mentioned that you are writing. So financial reporting, we'll come to public sector in a moment. So financial reporting. This is a strategy for the financial reporting examination. The strategy is for you to start with all the written questions. Okay, you start with the written or the theory questions. All of them. So you want to read through all the questions as fast as possible. Then you start with the written or the theory questions. Now, you must understand that in financial reporting, the written or the theory questions will, among other things, include the following. Some accounting standards issue, IFRSs, some issues in respect of ethics. We're going to be having issues in respect of sustainability. Then certainly some theories on the conceptual framework and regulatory framework. Okay, so IFRSs, ethics, sustainability, conceptual framework, and then theories coming in from consolidated financial statement. Okay, so for the theory areas, these are the things that we need to understand. So there's going to be at least 20 marks questions in the financial reporting examination that will be on theories. And so the strategy is that you want to optimize yourself on these written areas, master the ethics, master the accounting standards well, because there will be some theories that the examiner will bring, sustainability issues, quite interesting discussions, conceptual framework, then the consolidated financial statement, there are some theories there. So the strategy is that you want to read through all the questions and take out all the written questions that you can do best first. As I mentioned, it's likely that all the theory questions will be put in the question 5 area. If the examiner decides to spread it across board, because under the question 4, evaluation of financial statement, we could have a theory question there. In the accounting standard area, in question 2, we could have some theories there. So the strategy is you read through all the questions, and then you mark out all the written questions that you can do best first, and you want to take them out as fast as possible. Then, based on your level of understanding, you come to the second part, which is going to be ratio analysis. I tell my students that ratio analysis is an easy peasy area if you understand the guiding principles in respect of ratios. So the second area of discussion will be the ratio analysis, and I'm going to give you a breakdown of that in a moment. From there, you can come to question number 3 and question 2. So question 3 and question 2, you can decide which one to do next. Why? Because question 3 and question 2 are all on accounting standards. Because when it comes to the single entity financial statement, you are just preparing the accounting standards using preparing the financial statement using the accounting standards. Then the accounting standards proper, in question 2, you are also applying the accounting standards. And so you're going to just read the questions, and then you find out or ask yourself, between question 2 and 3, which one can I do first? Based on your understanding on the standards that are given in the footnote. Then certainly you want to go to the last one, question 1, consolidated financial statement. You want to solve that as your last but one question. This is something you must understand. If you start with a consolidated financial statement, because financial reporting and corporate reporting students, there is a certain level of mind that people walk into the exam hall with, or even if when they are studying, because people are like, hey, console. So that's their mind. Console. Yes, but consolidation is just 20%. Don't ignore the 80% area. What has been happening in the past, and the chief examiner has said this over and over again, is that students attempt the consolidation first in the early part of the discussion. They're able to solve it, but they end up failing the examination. Why? Because the amount of time on the average that the consolidation will require, it will end up causing you to go and fail the examination. So that's why my recommendation is let the consolidated financial statement be your last or last but one question, and you are going there to pick up some easy marks. And we are going to be going through some of the things as we proceed in the discussion on where exactly those easy marks can be found. So when it comes to the order in which the questions will be answered, we take the theory ones that we can do best first. We come to the evaluation of financial statement. We come to question 2 and question 3 because they are all relating to the accounting standards. And then certainly we go to the last area, which is going to be the consolidated financial statement. So that is the order in which questions should be answered. Remember also in the exam hall, you are not supposed to write in the margin. Right? I've said this over and over again. You're not supposed to write in the margin. So you cannot write in the margin here or below. You cannot write. So you want to make sure that you are writing in the area that you are supposed to write generally at the end of the day. So that is the order in which the question should be answered. But what are some key issues we need to be mindful of generally? To be able to excel in the financial reporting examination, there are some core accounting standards that you need to be mindful of. So as you are going into the exam hall, there are some core accounting standards that you have to be mindful of going into the exam hall. What are these core accounting standards? Number 1, IAS 16, property, plant, and equipment. That is an accounting standard that whether you like it or not, there is something about it that will be in the exam hall. Either under the single entity of financial statement preparation, whether the examiner wants us to prepare a cash flow statement or the examiner wants us to prepare the statement of profit or loss and other comprehensive income, you are going to be calling on IAS 16 whether you like it or not. Then the examiner can also bring a question where we are supposed to apply IAS 16. Then the second accounting standard that we cannot run away from is IAS 12, income tax. Another fundamental accounting standard. It will be there in the single entity financial statement preparation or as a dedicated question on its own. So it is important you understand the accounting standard IAS 12, income tax. Done deal. You got to know about it. Then these 3 guys together, IFRS 9, financial instrument, its associate, IAS 32. So IFRS 9 is financial instrument, measurement and recognition. IAS 32 is financial instrument, presentation. And then IFRS 15, revenue from contract with customers. And the last one is going to be IFRS 16, leases. So these accounting standards, there are 3 core accounting standards that you have to understand. Now, it depends on the excitement of the examiner. If we are preparing single entity financial statement, then as part of the footnote, we may have some issues in respect of revenue recognition, IFRS 15, or have some issues in respect of the recognition of a lease arrangement that the entity has entered into in that regard, IFRS 16. And so these 3 accounting standards, whether you like it or not, you have to understand them before you get into the exam hall. IFRS 9, financial instrument, recognition and measurement. IAS 32, financial instrument, presentation. IFRS 15, revenue from contract with customers. And IFRS 16, which is leases. You must understand these accounting standards. They are standards that you cannot negotiate yourself out. You got to understand them before you get into the exam hall. Now, in addition to these primary standards that we need to be mindful of, you have to understand that whether you like it or not, in the question 2 area, the examiner is going to be bringing a question relating to non-current asset accounting standards. So the non-current asset accounting standards must be understood in the question 2 area. So the question 2, 20 marks, the examiner may do it 5, 5, 5. So A, B, C, D. which means 555, right? Or the examiner may do 3 and pack it together 776. In that question 2 area, whether you like it or not, one of them or two of them or almost all of them, you may have to apply the the accounting standards in respect of the non-current assets. And so before you get into the financial reporting examination, you have to understand all the non-current asset accounting standards. Now, so the question you then have to ask yourself is, what are the non-current asset accounting standards? A number of things. Number one, certainly IAS 16, I've already spoken about that, property, plant, and equipment. IAS 23, borrowing cost. IAS 40, investment property. IAS 20, government grant. IAS 38, intangible assets. IAS 36, impairment of assets. And then the last one that I will bring will be IAS 2023 16 30 36 IFRS 5, non-current asset held for sale and discontinued operation. So these non-current asset standards, whether you like it or not, in the question 2 area, 1, 2, or 3 of them will be there, and you have to apply them to be able to answer a specific question. Very important. So you need to understand these accounting standards before you get into the exam hall. And, you know, this is where someone will say, yo, Nhyira, then it looks like gotta learn all the accounting standards, yada, yada, yada. Yeah. As many as you can understand, you must know about them. Why is that important? Because in the exam hall, the examiner can do whatever he wants to do. And so this is where you can leverage our summary videos in the Nhyira Premium mobile application to really go through these accounting standards and understand the principles. Then after that, you go to the practice question courses, and then you look at the questions in respect of these various accounting standards to master the principles. Because in the exam hall, all you are doing is the application of the principles. So these non-current asset accounting standards, whether you like it or not, my recommendation will be, before you get into the exam hall on the 3rd of November, understand all of these accounting standards. IAS 16, non-negotiable. IAS 12, non-negotiable. IAS 23, IAS 40, IAS 20, IAS 38, IAS 36, IFRS 5. Because whether you like it or not, you would have to apply the principles from these to a given question. Either dedicated question, or it will be part of the footnotes to the single entity financial statement preparation. So you better understand it. So that is the flow of the accounting standards that you must understand. Non-current asset accounting standards will be there. You must be ready for the examiner, so you are not taken by surprise. But that doesn't mean these are the only accounting standards that you have to be on the lookout for, because there are other accounting standards that you have to be mindful of. Certainly IAS 37, provisions, contingent liabilities, contingent assets. The issue in respect of IAS 33, earnings per share. Not forgetting IAS 10, events after the reporting period. Not forgetting IAS 20, that is going to be government grants. I've already spoken about that. IAS 21, effect of changes in exchange rate. IAS 24, related party transactions and accounting for related parties. You must understand them. Are you getting it? So what am I trying to say? Yes, there are quite a number of nuances when it comes to dealing with the accounting standards, but you have to know all of them because the examiner is going to be there. But for starters, get your IAS 16 right. Everything in IAS 16, you cannot get it twisted. Everything in IAS 12, income tax, it will be there. You cannot get it twisted. Then the three musketeers: financial instrument, IFRS 9, IAS 32, revenue from contract with customers, IFRS 15, and then leases. Then the non-current asset accounting standards, you must understand them, because that is how you can put yourself in the position to go into the exam hall, write the exam with confidence, and pass the examination. So these are the accounting standards. Remember, to pass the financial reporting examination, and by extension the corporate reporting examination, you must understand the accounting standards, because you may call on the accounting standards in the question 2. Not you may, you will. In question 3, you will call on it. That's 40%. Then in consolidated financial statements, there are accounting standards there. So even under the consolidated financial statement, there are a number of accounting standards. So consolidated financial statement, there are a number of accounting standards that you have to be mindful of. What are these accounting standards under consolidated financial statement? For instance, IAS 28, accounting policies, changes in accounting estimates. Sorry, not accounting policies, changes in accounting estimate. Investment in associate, IAS 28, investment in associate. Then we have IAS 11 or IFRS 11, which is joint venture arrangement. Certainly, you go to IFRS 3, business combination. IAS 27, consolidated financial statement and separate financial statement. So in consolidation, those standards are also going to be important, very valid for you to pass the examination. So this is what you must understand about the financial reporting examination. So if you pay attention and look at the way we go through our discussion, you realize that I optimize a lot on the accounting standards. Because if you are good in the accounting standards, question 2, 20 marks. Single entity, 20 marks. Even we may have a standard related question in the exam hall under the theory areas. 5 marks coming in, so making 45. Then we may have to call on the standards sometimes when it comes to the evaluation of financial statement area, because there is a type of ratio question that may require us to readjust the financial statement, and so we calculate the ratios, and then we can interpret the ratios. So that is also something that you must understand there when it comes to dealing with financial reporting, and a little extension to corporate reporting. So those are the standards and the way they are knitted together. And as I say always, it's not like these standards are independent on their own. They have some level of connection. So for instance, if you take IAS 16, property, plant, and equipment, it is divided into 2. That is the initial measurement of the standard and then subsequent measurement. So the way you learn the standards will be under the initial measurement of PPE, the initial cost of an asset shall be the purchases cost or the manufacturing cost or the construction cost plus all other directly attributable costs incurred in bringing the assets to its present use. Okay, so what does that mean? It means that in a simple term, under the initial measurement, we could have IAS 20 coming to town, government grant. We could have IAS 37, provision for environmental cost or dismantling cost. Number 3, we could have the issue in respect of IAS 23, borrowing cost. Because if there is a borrowing cost, that will influence the amount of the initial measurement of the property, plant, and equipment in that case. So that is a standard that will come in the initial measurement. Next one, we could talk about IAS 21, effects of changes in exchange rate. Because if we bought the asset and the value is denominated in a foreign currency, then it must be translated to the functional currency or the reporting currency of the entity at the initial measurement date. So IAS 21 could even be called on there. Then certainly IAS 19, employee benefits, because when we are constructing or building an asset and we pay wages and salaries to the people during the active period where the work is ongoing, then certainly the salary paid to the people must be included in the initial cost of the asset. And so these are some standards that we have to learn to be able to know about the initial measurement of an asset. And this is the beauty, because that initial measurement rule is going to be coming in respect of other accounting standards like IAS 38, intangible assets, IAS 40, investments property. The initial measurement of these have the same resemblance like the IAS 16, property, plant, and equipment, that we need to understand. And these are the things. On subsequent measurement, there are some other standards that have some relationship. For instance, we can talk about IAS 12. Because on subsequent measurements, assets may be revalued. And when assets are revalued, it is important we understand the tax implication of the revaluation. And so this is where deferred tax is going to be coming to town. We must understand that. Then there could be issues about transfers, where we are moving from IAS 16, property, plant, and equipment, to an investment property, maybe IAS 40. Or you are moving from investment property, IAS 40, to PPE, IAS 16. Or you are moving from IAS 16 to held for sale, which is IFRS 5. So if you remember, for those of you who are studying under my mentorship, when we're learning this was how we did the treatment. So if you look at it carefully, you realize that, oh, then in that case, the accounting standards are not difficult. Why? Because they are interconnected. They are intertwined. It's not like, oh, something is on its own. Yeah, there are some standards, they have no relationship with other standards. Like IAS 33, earnings per share, it's on its own. Boom, you got to deal with it on its own. But there are other standards that have connection with each other. And that is how you have to study the standards. So as you are revising, that is how you prepare your principal document. And so, like my recommendation always, at this point, you should have a summary note. So maybe you have a notepad, a notebook, or your iPad or tablet or something like that, and you grab it and you go to the summary videos in the Nhyira Premium mobile application, which you can download on the Google Play Store, the Apple App Store, the Nhyira Premium mobile application. So you download the application, get access to those summary videos, then you watch them. Because the summary videos gives you the principles, the concept, the principles, the concept. And the law is the law is the law. The principle is the principle is the principle. So when you understand the principles, then when a question is given to you, all you are going to do is to apply the principles. That's all. And so many a times the problem of students is lack of understanding of these principles. So I have students who will be like, yo, Nhyira, the accounting standard, it's difficult. And I said, no, it's not that the question is difficult. Your problem is you are not taking time to assimilate, understand, and really get into your spirit the principles underlining the accounting standards. So as we are revising, as we are bringing the discussion to a closure for the November 2025 examination, you want to put yourself in the position where you are understanding these accounting standards well. And if you can learn them like this, you'll be in a good position to pass the examination. I see some of you guys joining. You are welcome to the stream. Make sure you like the video, share, and subscribe. This is a live Q&A session and giving you some tips on how to study, the key areas to focus on to optimize your chances in passing the examination. So if there are any questions you have, don't hesitate. Put it in the comment section or the chat for me. I'm going to be reading all your questions and as well as reading all your comments. And if there's anything you have, just put it in the comment section or the chat, because I'll be excited to answer your questions and help you to be able to pass the examination at the end of the day. So let me hear from you in the comment section or the chat box. Any questions you have, drop it there for me. And also give us a thumbs up on the video, share the video if you are getting some values, because definitely we want to reach as many students as possible preparing for the examination at the end of the day. So these are the issues about the accounting standards and how you approach the standards. So the strategy for the standards in a closure will be, hey, number one, understand the principles. Okay, understand the principles when it comes to the accounting standards. When you pick any accounting standards, among other things, we will have recognition criteria. Okay, we have recognition criteria. We'll have initial measurement. We're going to have subsequent measurement, and then disclosure requirement. So almost every accounting standard you pick, these 4 things are your goal. You must know them. Okay, so what is the recognition criteria for provisions? Simple. If it is rotten, you provide for it. In other words, the amount can be reliably estimated R. There is a present obligation O. Transfer will result into or settlement will result into transfer of future economic benefits. So that is ROT. That's the recognition criteria. Okay, very simple. What is the recognition criteria for assets? Maybe PPE. Okay. It is probable that the future economic benefit will flow to the entity, number one. Number two, the cost or fair value of the assets can be measured reliably. Easy peasy. That's the idea. Then you come to the initial measurement. Then you come to the subsequent measurement. Then the disclosure requirement. What does that mean? It means that the examiner can bring you questions on the standards from initial recognition or subsequent measurement or disclosure requirement. Sometimes the question will be twisted in such a manner that you would have to apply initial recognition, apply subsequent measurement, and even do some disclosures based on the context of the question. So those are the things that you must understand when it comes to the first thing, the principles. Now, once you get the principles in respect of the accounting standards, you come to step 2, which is practice questions under time. And you see, one of the reasons why people fail the examination is not because they don't know, but because they are not able to work within time. And there are many of you, if care is not taken, time is going to be your enemy in the exam hall. The reason is because many of you might not have practiced anything under time. Many of you might not have put yourself in a simulation to work with speed and accuracy. So to optimize your chances of passing the examination, during this revision session, you want to practice questions under time. And this is important because you see, sometimes you walk into the exam hall. By the time you realize, get ready to stop work, or they say 1 hour gone. 1 hour gone and you have answered only one question, even though you are not even done. By that time, you start panicking. And immediately you start panicking in the exam hall, you got 10 seconds to kill that spirit. If you're not able to kill that spirit in 10 seconds, you start panicking. And that is the beginning of your failure. And so to help you, to make your brain sharper, help you to work within time in the exam hall, help you to work on speed and accuracy, and even familiarize yourself well with the calculator, it will be important for you to practice questions under time. So that is why we mentioned that when you enroll in our practice question courses, you're going to get access to the practice questions and the solution. So before you even watch the solution, what do? Solve the questions under time. The trick is very simple because each 1 mark uses 1.8 minutes. So you put a stop clock on, then you challenge yourself. You put a stop clock on, then you challenge yourself. That is how you put yourself in the position to pass the examination. So practice questions under time. Again, on our website, you will get access to live practice questions on almost all the subjects. It's there. It is made so that you can work with time, so that you can challenge your thoughts, so that you can familiarize yourself with punching the calculator. There are some of you, you can't even punch the calculator. Nhyira, I'm a slow puncher. Nhyira, I'm a slow learner. Nhyira, I'm a slow writer. Nobody was born slow. You have manifested and lied to yourself that that is who you are. Because in the exam hall, you will not get extra time as a slow puncher, as a slow writer. No. So you have to reorient your mind, practice questions under time. And when you're practicing questions under time, what are you doing? You are crystallizing the principles. You are exposing yourself to different aspects of the questions. Because when you take IAS 16, there are different aspects of questions that we can have when it comes to IAS 16. If you take other accounting standards like provisions, there are different aspects of provisions. Even when you take government grants, different aspects of government grants. When you take financial instruments, different aspects of financial instruments. So expose yourself to questions. Get questions. The ICAG question bank is there. Get it. You can also get our practice question courses. Gives you access to numerous questions under each of the standards, each of the key areas of the syllabus. That is the second thing you want to do to put yourself in the position to go into the exam or write the exam with confidence, and most importantly, pass the examination. So, understand the principles, practice questions under time. The reason why that is important is that so that you can now work on speed and accuracy. Okay, speed and accuracy. Please, there is no magic anywhere. Let me tell you off the records. There is no magic anywhere. So you are going into the exam hall to write the exam. 99.9% of the questions you're going to see in the exam hall, you've not seen it anywhere before. So all you are doing in the exam hall is applying the principles. That's all you are doing, applying the principles. And that will require you to work with speed and accuracy. What does that mean? It means reducing the time between reading the question and answering the question. And that is what you must understand. If you can understand the principles well, expose yourself to questions so you can work with speed and accuracy, you will be able to pass the examination hands down at the end of the day. That I can guarantee you. So that is the idea about what you must understand generically when it comes to dealing with the accounting standards. But not only that, although the accounting standards are the pillar that will hold us, there are other areas like evaluation of financial statement, or what we term as ratio analysis. So evaluation of financial statement, or what we term as ratio analysis. There are various types of ratio questions that the examiner can bring in the exam hall. So permit me, I think I've shown you this before, but permit me to bring it up again as we are revising and getting some strategies for the examination. So examination analysis document, ratios. Let me see if I can get this quickly. Yeah, got it. Coming up. Good. Sorry. So there are 6 types of ratio questions that you have to be mindful of. And this is the deal. Before you go into the exam hall, you must understand all these 6 types of ratio questions. And this is applicable to corporate reporting students as well. 6 types of questions. My goal, as always, is to tell you what to expect in the exam hall. Then expose you to questions under each of the choices that the examiner will have. Then you put yourself in a position so that when you go to the exam hall, whatever that is there, you have been introduced to it, so boom, 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 you'll be able to provide the answer. The first type of ratio question is the simple financial statement. So you just have the financial statement. The examiner says calculate profitability ratios, liquidity ratios, working capital ratios, gearing ratios, and then analyze. Very simple. So that's the first type of ratio question. Simple question. The second type of question is where the examiner will give you the ratios. So the ratios have been calculated already, and all you are going to be doing is to analyze the ratios. Analysis of the ratios. Now remember, whether you like it or not, financial reporting, corporate reporting student, you will write ratio in the exam hall. It's a done deal. And that is going to be between 8 to 12 marks in the exam hall, depending on how excited the examiner is. And so it is important you understand the way you write out the ratios. This is very important. You must know the way you write out the ratios. And again, we've shared the principles on how you interpret the ratios and the various things. And we have the ratio analysis document, which we have shared with you, and you have that already. So you make sure that you understand the analysis guideline. If I'm interpreting profitability ratios, I'm starting with asset turnover, coming to gross profit margin, going to net or operating profit margin, coming to return on capital employed, or ROSI. And then there are the guiding principles that I need to look at. If I'm interpreting asset turnover, what is my reference point? Gross profit margin, what am I referring to? Net profit margin, what am I referring to? And then issue in respect of ROSI, what am I referring to? So you have to understand that generally at the end of the day. The third type of question is vertical or common size analysis. This is where the financial statements are presented in percentages, and that is vertical statement analysis. It is the normal ratios you know, but this time around presented in a statement form, and you're not supposed to do any calculation. All you are going to be doing is to analyze. That's a third type of ratio question. The fourth is the changes in business. Changes in business. So this is where at the beginning of the current year under review, the entity acquired a new entity, or at the beginning of the year, the entity disposed of part of its business. And so there are principles on how we have to adjust the financial statement, how we have to calculate the ratios, and most importantly, how we interpret the ratios. So when there is a change in business, for instance, at the beginning of the year, the entity has acquired another company. What does that mean? It means for all intents and purposes, the current year financial statement will be a consolidated financial statement, but the previous year financial statement will be a single entity financial statement. And so to enhance comparability, we will calculate the ratios for the last year, we will calculate the ratios for the current year as reported. Then you have to also calculate another ratio for the current year, excluding the results of the entity that has been acquired during the year. And then if you are doing the analysis, you will go through the same route. You're going to compare the previous year financial statement to the current year as reported, and then talk about the impact of the entity that has been acquired during the year on the performance of the entity. So these are really crucial areas. And one of the things that is interesting to me is especially some students who will never write analysis, right? Because they are, for some reason they think they are omnipotent. And they won't write analysis. As I say always, I pray for you that you go to the exam hall and write something substantially sensible so you can pass the examination. Because ratio analysis is an area where if you're not careful, you would think you are writing something sensible, but if it is read back to you, you realize that, holy cow, you were writing absolute nonsense. Quite surprising. Like you are writing absolute nonsense. And so in the ratios, you will write it in the exam hall. So practice it. You will write it in the exam hall. Understand the principles. You will write it in the exam hall. So work yourself out. And it is between 8 to 12 marks. That writing analysis. And listen, you don't leave free marks like that. Because if I know ratio is going to be there, and these are the options available to the examiner, I want to expose myself to all of the questions under these, know the principles, know how to write it out, because as I'm going into the exam more, one of these will be there, and boom, I can do the workings, do the analysis, and get about 90% of the marks allocation. And that's what you want to do to optimize your chances of passing the examination. That's very important today. Then we go to the fifth one, and that is an interesting one where the accounting standards may be applicable. So here, the examiner gives us the financial statement, gives us a footnote as well. And what we are doing here is that we will adjust the financial statement by application of the accounting standards. And then after that, we calculate the ratios and interpret the ratios. That is the fifth type of question. Then the sixth one is reserved for corporate reporting students, and that is consolidated cash flow analysis. And again, these are the options available to the examiner. Your responsibility is to find out, in each of the type, what am I required to do? In each of the type, how do I adjust financial statements? In each of the type, how do I write out the analysis or the interpretation at the end of the day? Because that is how you can put yourself in the position to go into the exam or write the exam with confidence, and most importantly, pass the examination. So those are the things you must understand about the ratios. And as I said, the ratio analysis document, you have it already. And so certainly you make sure that becomes your guiding principle for the way you write out ratios and deal with this 20 marks area for the examination. That's the idea. Now, so once we get the ratios issues also out of the way, then we are in a comfortable lead to go and pass the examination. Finally, it's going to be consolidated financial statement. Yes, you got to look at it. And there are a lot of things under consolidated financial statements that you must understand. And easy marks that you can take. For instance, some key workings you must know about. Yes, not forgetting your group structure. Because your group structure in the consolidated financial statement will help you to have an understanding of the issue in respect of, how do we call it? The post-acquisition period. Because you know the post-acquisition period is crucial for you to share the post-acquisition profit or loss, and even to be able to calculate the post-acquisition profit or loss. So that is a key workings that you have to do there. Then you come to the goodwill calculation. In almost every consolidated financial statement, you will calculate goodwill. And it depends on the context of the question, because you can calculate goodwill at acquisition and goodwill at the reporting date. It depends on the examiner and what he wants you to do. He may want you to do goodwill at acquisition, or because you are preparing consolidated statement of financial position, he may want you to do goodwill at the reporting date. But there is some marks between 3 to 5 that will be available for goodwill. So you must understand, how do we get fair value of consideration transferred? We'll get into some of these things later on in our discussion. How do we get the issue in respect of the net assets at the date of acquisition? You must learn these principles. Again, the principles of all of these are available that you can get access to in the Nhyira Premium mobile application under the key summary videos, so that you'll be able to understand all of these very well. Again, as you are going into the exam, you are just applying principles. The third thing will be intra-group trading. For financial reporting students, whether I like it or not, there will be intra-group trading in the consolidated financial statement. Either they are selling goods or they are transferring assets among themselves, and you must know how to calculate provision for unrealized profit, do the necessary adjustment, cancel the things that have to be canceled. So intra-group trading, very important. Corporate reporting students, it's not all the time that there will be intra-group trading there, because there are a lot of bigger issues that the examiner wants to get goosebumps on. But it's a principle we must understand going into the exam hall when it comes to dealing with the issue in respect of consolidated financial statement. So getting your group structure, calculating your goodwill, dealing with intra-group trading, and then doing the various other adjustments. So doing the various other adjustments that you have to be mindful of. Now, when we say the various other adjustments, like what are we talking about? Other adjustments in respect of, you are preparing the statement of consolidated statement of financial position. So you have to do non-controlling interest at the reporting date. You have to do retained earnings, that is consolidated or group retained earnings at the reporting date. You must understand them. Then for corporate reporting students, in addition to these, we may have to deal with subsidiary. And as I said, we'll get into the principles of some of these things as we proceed in our discussion. But consolidated financial statements, quite an interesting area. So consolidated profit or loss, consolidated statement of financial position, consolidated cash flow statement for corporate reporting students. And that is question 1 going to be in the exam hall. And it is important for you to understand them as you go into the exam hall. And these are the things that you have to understand when it comes to your financial reporting and by extension corporate reporting. Now, so if I come back for corporate reporting students, there are some other accounting standards that you need to understand. Okay, for corporate reporting students, there are some other accounting standards that you need to understand, like IFRS 2, share-based payment, IAS 19, I spoke about that already, employee benefits, and then the last one will be IFRS 8, operating segment or segment reporting. You must understand them because there are issues there. So these are, these are exclusive accounting standards that you have to be mindful of as you are going into the exam hall. And this is the scope, structure of your examination and how you study. So what is the overall takeaway here? The overall takeaway here for you as you go into the exam hall, financial reporting, corporate reporting, is number 1, know the exam structure as we have spoken about. We will have consolidation. We'll have some standards. We'll have single entity. For corporate reporting students, between business valuation and financial reconstruction, one of them will be there. And we'll get into the breakdown of some of these things later on. Then ratio analysis. We've seen the 6 types of ratio analysis questions. One of them will be there for you. Then some theories. Up to 20 marks written questions will be there. So that's the structure of your exam. Once you know the structure of your exam, now tailor your studies and the way you're going to be approaching them in the exam or in that manner. And the strategy, as I've said, is take out the written or the theory questions first. You want to do that quickly first. Then you come to the ratios, because if you are strong in your ratios, you can do that easily, quickly. Then between question 2 and question 3, they are all going to be standard related financial reporting students. So you choose the one you want to do. Then consolidated financial statement should be your last or last but one question as you go into the exam hall. So these are the things that you have to understand when it comes to the idea about these are the things that you have to understand when it comes to the idea about the consolidated financial statement, by extension, financial reporting and corporate reporting. So, any other questions for me? I'm seeing some questions coming up. Let's see if I can bring them in. Any other questions for me? You put it in the comment section or the chats. I should be able to bring that up generally. Let me see if I have any questions here. We are also live on TikTok. And if you are watching on TikTok, you can also get access to the videos on our YouTube channel, Nhyira Premium, the same name. On YouTube, you can get access to the video. So, because we are also live on TikTok, we are also live on Facebook as well. So let's see. I'm seeing some comments coming up. Let's see if I can bring some of them quickly. John Belesi said, thanks, sir. Okay, you are welcome. Then Bob Little said, "Good evening, sir. Is there a limit for the accounting standards?" What do you mean? I don't get the context of the question. When you say a limit for the accounting standards, what do you mean? Are you talking about the scope? Are you talking about limitations of the accounting standard itself? So, Bob Little, sorry, if you are still on the call, you can give me some crystallization to your question, and that will help me to provide you with a better answer at the end of the day. Okay, so give me something that will help me to provide your answer. So those are the things that we must understand when it comes to financial reporting and the learning strategy. Now, tomorrow, 4:30 or 16:30 GMT, I think I'm going to be coming live. We're going to be spending, oh no, maybe tomorrow we can do 5 p.m. and we'll have an extended version where I will go through public sector, go through some of the other subjects, and then we will zoom in into an intensive revision session tomorrow, God willing. So make a date tomorrow to join me, okay? Either on Facebook, YouTube, LinkedIn, or TikTok, wherever you can join me from. You join me tomorrow, 1700 GMT, 5 p.m. We're going to see if we can have an extended version of tomorrow's session so that I can look at this same breakdown for public sector, this same breakdown for management accounting, this same breakdown for financial management, taxation, and the other subjects. Then I will now scope into financial reporting, management accounting, the specific topical areas, the various things that we have to understand there. So this is what we have to understand, and that is all there is that we need to be mindful of. So that's it about that. I'm going to wrap up on the discussion here today, and God willing, tomorrow going to be coming your way at 5 p.m. so that we can continue with the discussion. Thanks very much for joining us on the stream. For those of you who are sharing the videos, really appreciate it. It helps us a lot to reach many people and also grow the channel, the platforms very well. If you have not followed us yet, make sure you follow the Nhyira Premium page and give us a thumbs up, share the channel. Let's reach as many students as possible and help as many people as possible preparing for the examination. So thank you very much, TikTok, for joining us. And then thank you very much for YouTube as well for joining us. Now, I think there is a question that has come up. Let's see if I can look at that. Say, what's the question 5 really? I just mentioned that the question 5 is a written area in the exam, and I said that area is going to be covering, among other things, theory question on accounting standards, ethical issues, sustainability, conceptual framework and regulatory framework, and consolidated financial statements. So the theories are going to be coming from these areas, together making 20 marks. Right? So one accounting standard may come, and the examiner is asking you a theory question about that standard. Ethics, 5 marks. So some ethical issues, the examiner may ask you something about it. Conceptual framework and regulatory framework, the examiner may bring a 5-mark question about that. Then consolidated financial statement, because there are a lot of theories in consolidation as well. So consolidated financial statement, 5 marks. So these 5 things, the remaining one other issue, I'll bring it up later on as we break down the syllabus one after the other. The examiner will choose those 5 marks questions coming in from there. For instance, let's see if I can show you last semester. I don't know if I can reach the ICAG website. Because I was trying to reach, all I was getting was error 404. I didn't know why I was getting error 404. ICAG. because sometimes their websites can be down, so who knows? Yeah, the site is not even reachable. But that's the idea because I just wanted to show you. But we'll get a breakdown of that as well as we break. But those are the areas: standards, ethics, sustainability, conceptual framework, consolidated financial statement. So there'll be theories coming in. The examiner may glean 3, 2, 5, 3, 2, 5, 3, 2, 5. Together, getting 20 for the written marks area. So vibe with Musco. That is the answer to your question there. And that's it about that. And as I mentioned, you can get access to our practice question courses on our website. You visit NhyiraPremium.com and you can get access or download the Nhyira Premium mobile application on the Google Play Store or the App Store. Just the same name you see wherever, whichever platform you are watching or listening to this from. There's the same name. You go on the Google Play Store or the Apple App Store. You'll be able to download the Nhyira Premium mobile application. We have a lot of content in the mobile application that can help you. And you can also enroll in our full courses or practice question courses so you can prepare well for the examination and pass the exam. If there are any questions you have also, you can just call the number you see on the page and boom, you will be assisted, or send us a WhatsApp message and you'll be assisted. Thanks very much, and I'll see you tomorrow at 1700 GMT, 5 p.m. Ghana time, as we continue with our discussion. So bye-bye TikTok, and bye-bye everybody.